Working on the weekend like usual. Oh man, wow. Do we have a video we're about to get into here today, okay? We're talking about what are my expectations for the stock market in 2023. Do I think it's going to go up, down, all around, all those sorts of things? I want to not just give my opinion in today's video. I want to give you guys and show you a massive amount of data so you can make your own judgments as well on what you think is going to happen to the stock market, to the Dow, to the S&P, to the NASDAQ in 2023, which I think is on everybody's mind, probably more so than going into any other year, to be quite honest. And given what has happened in 2022, that, you know, and also the worries about a serious recession, a serious economic downturn, a lot of companies very scared. We have inflation still going on. We have a lot to deal with, and everybody's looking at this market and like, what's going to happen here? So yeah, I want to give my opinion and show you guys a ton of data in today's video. This is a beast. I've been wanting to do this video, and I was like, I'll do it on a Saturday because Saturday's kind of like my off day, and if I have the closest thing to an off day, and so I was like, this will be the day I prep this video and do this video. It's probably going to be like a 40-minute beast or something like that. It's such a beast video that I brought out a coffee drink so I can have something to drink. I brought out some Advil because it's such a beast video that I might get a headache at some point through. So, you know, you got to be ready, got to be prepared. So hope you guys enjoy this as always. I appreciate everybody that subscribed to the channel. And man, we have a lot to get into in this one. Okay. Now, before we get into how I think the market's going to do in 2023, all the data I have to show you, all the numbers and things like that, I have to say a few things at the start here, okay? One is you might have heard this saying before, you might not have heard this saying before, time in the market beats timing the market. This is 100% true. So regardless how you feel is got, you know, whatever's going to happen to stocks, you've got to remember that quote for life. And I'll show you some data here in just a second that like proves this point essentially. But you know, a lot of people get tied into this whole like, oh, let me time the market, and especially dangerous when we come off of a bad year in 2022, because everybody's looking like, why didn't I sell my stocks back in November of 2021, December of 2021, or at the very first day of January? Why didn't I just get out of the market completely in 2022, right? And that's what everybody says in a tough time period like that. And I'm sure people were saying that same exact thing in 2008. They're like, why didn't I sell in 2007? Well, oh my gosh, I should have sold in the summertime of 07, right? And so you get in this very dangerous mindset, and the plan doesn't work. It never has worked. It never will work. That's the bottom line. The whole timing the market thing never has worked. It never will work. It's not part of the blueprint. It's not part of anything that works, okay? And to kind of illustrate this point, if you just stay fully invested in the market, you're going to do so much better than other folks, because other folks will end up missing many of the best days in the market because no one can time like, oh, this specific day the market's going to go up a ton or down a ton. No one can do that, okay? And what you're going to find over time is when you miss just a few of the best days, you could end up taking yourself from a positive return in the market to a negative return in the market. And this is why it is so dang important that you stay invested. I don't care how bad. I don't care if you think we're going to have the Great Depression. At the end of the day, you're probably wrong. More than likely you're wrong. And at the end of the day, you have to stay invested in the market. You have to buy the dip. This is another illustration here that shows you S&P 500 over time. If you just stay invested, if you just miss a few of the best days, your returns go down exponentially. And remember, this is annualized return. So, you know, when you start adding up these returns missed over 5, 10, 15, 20, 30 year span, you're talking about potentially hundreds of thousands of dollars, or dare I say millions of dollars you missed out on over the course of your life because you chose to not be in the market because I might go down next week, next month, or next year. So, you know, the numbers aren't on your side. None of this is on your side, okay? The best investors in the world, in history, are not on your side either, okay? If you look at folks like Peter Lynch, he says far more money has been lost by investors preparing for corrections or trying to anticipate corrections than have been lost in corrections themselves. It's 100% right, and Peter Lynch is one of the greatest investors you will ever find out there. His returns are absolutely immaculate, unbelievable investor, right? And I think one of the greatest teachers of the generation of investors of the 80s, 90s, and into the early 2000s. You don't hear as much, obviously, about Peter Lynch nowadays, but for us that have obviously, you know, been in the market a while, we never forget some of these quotes and some of the great lessons Peter Lynch has taught us over time. Another great one Peter Lynch always used to say was the key to making money in stocks is to not get scared out of them, right? And And there's so many times to get scared of, right? Including, even if we think about a stock like Tesla, right? There's a million reasons why, somebody might want to sell Tesla over this next year. Oh, if there's a major recession that could hit Tesla's numbers, and if there's a big pullback in terms of debt, right? And people might not want to make big ticket purchases like houses and cars and things like that, right? There's a million reasons. But at the end of the day, you have to take away that portion and just at the end of the day, like if you believe that company's a company that's going to increase exponentially over the next 5-10 years, you have to stay invested. And if the stock dips in any significant way, you have to be a buyer out there. And that's the way it is in the market. And you have to do that not just for one stock, but you have to do that for a basket of stocks, 10, 15, 20 of the best companies that you believe for the next, number of years, right? Warren Buffett, one of the greatest investors ever of our generation and businessmen in general, right? If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Just a phenomenal saying. And far too many times people think about these stocks in terms of what's going on over the next 3 months, 6 months, 12 months. It's much more of a Wall Street game. Wall Street plays that game of trying to time in and out of the market, right? Now, Wall Street, some of the most intelligent people in the world, IQ wise, right? So first off, you just have to ask yourself, like, am I naturally more intelligent of a human than the Wall Streeters are, right? The Wall Streeters also have access to data you don't have access to, right? They have maybe even some information and data that is borderline illegal, right? So these folks are likely much more naturally intelligent than you. They have much more data than you. Some might even be illegal. Do you think, and these folks can't even outperform the market, do you think you're going to be able to do it and try to trade in and out of these stocks in a 3-12-month span? Come on, man. So just think about that for a moment, right? Think about that for a moment. And far too many people get tied up into that whole game, right? Warren Buffett also says, someone sitting in the shade of a tree today because they planted it a long time ago, right? And that is so true, okay? And even if I look at myself, right? Over the past year, I got completely away from my blueprint, bought way too many unprofitable stocks and went away from everything that ever made me successful, which was buying actual profitable companies, building out those positions and things like that. I loaded up on tons of unprofitable stocks and I paid the price in a massive way. And I went away from everything I teach. I went away from my entire blueprint, right? But at the end of the day, even after that, I'm still in a pretty good position because I've had so many stocks do so tremendously well over the past 14 years that I'm still living off of the trees I planted a long, long time ago, right? And so this is something to keep in mind. And as time ticks on, I've been in the market for about 14 years now. Imagine another 14 years in the future, another 14 years in the future. As time ticks on in this game, time is on your side. And so you can't stay out of things because it might go down over the next month, next year, something like that. We can all have our opinions on what might happen, what might transpire here. But at the end of the day, you've got to stay invested in the market. You got to continue to load up on companies that are great companies. Think profitable. Think companies with great balance sheets, great business models, recurring revenues, hopefully. That's one of the holy grails, right? And there's a ton of those stocks out there, and many of them are down 30, 40, 50, 60%. And so there's a tremendous opportunity in this market, and we'll go through that in this video as well, okay? But obviously, for today's video, we're talking about 2023. So yeah, a lot to get into. I needed to say that at the beginning, though, because we can get so tied up into our opinions of what's going to happen in the market and things like that. I think it's very important that we don't lose focus on the long term, and we don't lose focus that at the end of the day, staying invested in the market, buying the dip, it's what always ends up working over the long term. In the short term, it might not look like it works, but over the long term, it always works, okay? I hope you guys enjoy this video as always. And by the way, we got something we're trying in the private stock group right now. So if you want access to an actual individual Discord chat, we made a few of them available. So like the Palantir chat, you also get access to see my portfolios, my main portfolio, my dividends only account, and you get access into our in-depth weekly investor report we put out that just is so informative. It keeps you up to date with everything you could possibly pretty much want to keep up to date with in regards to that report. So we made it so it's like an a la carte option. So if you just want access to one chat, we do have the Google and AMD squad chats not available right now, but we have a few spots left in the Tesla chat, and we're just opening up a few spots just to kind of test it out and see how it is and whatnot. And then we opened up also the Discord in general with access to breadcrumbs, my accounts, exclusive videos. I do usually several exclusive videos inside the private group, every single week for $97. It's like an a la carte option. So if you're interested in that will be pinned comment down there. Also, if you're looking for my courses and the blueprint, that will be linked down there as well as pinned comment, okay? So first thing, we have to, before we can get to 2023, we have to run through 2022, right? And in 2022, we've witnessed the NASDAQ get crushed. Simply crushed, right? At the lows, the NASDAQ was down over 35% year to date at the lows, which is an extraordinary move. And honestly, no one saw this move coming. Now, maybe a few of the perma bears might have seen this move coming of 35% plus down this year, but those folks are almost predicting the market's going down a bunch pretty much every year. Like they're always making that prediction, right? And so eventually they're right, and it's like, oh yeah, see, the market went down huge, but they're always making that prediction. Oh, the market's going to go down. So you got to keep that. But most folks that are reasonable in the market did not see the NASDAQ going down 35%. I always keep up to date with so many different people's opinions, so many different folks on Wall Street, CNBC, Bloomberg, even here on YouTube. I didn't hear anybody, unless once again it was a perma bear that says the market's going to crash every year. I didn't hear anybody back at the end of 2021 saying, you know what, we're going down 35% plus on the NASDAQ in 2022. That just wasn't happening. So everybody got, as Mav would say, a massive pie in the face, right? And we all got something that we were not expecting. A horrible year in the market with countless stocks down 40, 50, 60, some even 70, 80%, and some even 90%, right? And even some of the greatest companies in the world, it's like, it would have been one thing if it was just more speculative companies, speculative plays. But the fact is, even some of the greatest companies in the world their stock prices got slashed in half, and some more than half throughout 2022. An extraordinarily bad year. Now, in terms of where the market's trading at now versus when we were going into last year, we're at obviously a different place, right? This is large caps. So large caps are still, unfortunately, on the richer end going into 2023. And we'll speak about that later on in the video because that is definitely a little scary. Literally, if you look at the last 20 plus years, we're still, other than the tech bubble times and recently, we're still high. We're still high. This is forward Ps for large caps. So never mind, and we'll speak about that in just a moment, if obviously companies aren't as profitable and their EPSs are not as good in 2023 as folks expect, right? Which is certainly a possibility. So now, do keep in mind, we're in a better place than going into 2022. 2022, you were at these skyrocket levels that it was just out of control, right? And a lot of that was due to a lot of companies having great earnings in 2021, optimism about the economy opening back up in 2022, what that was going to mean, the thought that inflation was just transitory and that the Fed would be able to keep rates very low for a very long time, right? And obviously, none of that came to fruition. Like literally every single thing ended up far worse than everybody expected, right? And so nonetheless, we're in a better position than last year, but we're still not in a great position, guys. The large caps are still trading a little rich, okay? Now, mids and smalls are a different story. Mids and smalls are trading at very undervalued valuations going into 2023. Now, they were already at pretty fair value or even a little undervalued going into 2022. So do keep that in mind. But we saw smalls and mids, a few months ago at the lows, we saw those go down to valuations we've almost never seen other than obviously during Rona and during the great financial crisis, which is two of the most extreme periods of time we've had in the past 25 plus years in the stock market, right? So the moral of this story is small caps and mid caps are going into 2023, undervalued. Bottom line, they're undervalued. But they already went into 2022 pretty undervalued or fair value, right? So it doesn't mean they can't stay down there for a while, but at the end of the day, it's unsustainable for them to stay at these valuations for too long. And eventually they're going to come back up into more normal ranges, which small caps, a normal range is like a 17, 18 type range, maybe even 19. That's when you're kind of in normal risk range. As far as the mids, you're at about a 16. So we have quite a ways to go in terms of just valuation expansion in regards to those stocks, right? Now, two core questions we got to ask ourselves is what if earnings tank for companies in 2023, right? And then is that probable? Well, first off, if earnings tank for companies in 2023, then obviously those numbers have to come down because at the end of the day, the expectations from analysts, right? Those are all running. When you're talking about forward Ps, you're talking about the average analyst expectation for what a company's EPS is going to be versus obviously what the stock price is right now, right? And so analysts are not going into 2023 super bullish by any stretch of the imagination. I don't even think they're going bullish. They're going kind of midpoint. But if things came in far worse, then actually all those numbers we just looked at there could be high, right? Now, is it probable? I would say the only way it's probable that, earnings tank for companies in 2023 is if you get a colossal recession and the whole economy just falls off a cliff in a major way. I'm not talking about a little slowdown. I'm not talking about unemployment going up a little bit. I'm talking about fall off a cliff. If that happens, then yeah, all those numbers are high and we got to come down a lot more, unfortunately. So that really gets into that whole recessionary part, which obviously we're going to get into in this video as well, because I know that's on everybody's, like mindset right now, right? Now, next up here, very important, federal funds rate. So obviously, this is the most steep increase in pretty much the history of the Fed, but certainly of the past, 20, 30 years in terms of just up in a straight line. And we're going to end up right around here as far as the finish line, right around maybe 4.5%, 5, maybe a little over 5% for the finish line for the Fed. Okay. Now, the reason they're not going to go up to like the 6s or 7s, first off, it's a possibility, as all things in the market are a possibility. But the reason they're likely not going to go up that high is mainly because everything as far as inflation is trending the right way. That I'll show you in just a moment. And so we're likely going to make a stop here. Now, the question is, how long are we going to stop there? And to that, I would say it really depends on how long it takes for the economy to really start falling off a cliff. If the economy stays in a decent place, I'm not talking about super strong, I'm just talking about decent. In 2023, then they would keep rates at, let's say, a 5-ish type number for the entire year. But if the economy starts falling off a cliff, believe me, the Fed will completely revert, and they will revert in a massive, massive way, and they'll do it rather quickly. At the end of the day, the Fed, what do they care about more than inflation? Unemployment. They've proved this out time and time again. And that's why they went way too far on the other side. And they were a huge part of the reasons why inflation's so high, right? They were not the only reason, but they were one of the core reasons. And the reason was they wanted to see this unemployment get well under 5% and even hopefully under 4%. Once they got that, then they're like, oh, we got to start worrying about inflation. We can start raising rates and things like that, right? So at the end of the day, if you start to see the economy fall to pieces, unemployment start to rise in a substantial way, specifically start to approach 4.5% and 5%. It doesn't matter what inflation's at that time. The Fed's cutting rates. Doesn't matter. They don't care. Inflation is always their number 2 objective. And they've proved it. Jay Powell's proved it. It's number 2. As long as unemployment's in a good place, then they can tackle inflation. But if there's any sort of issue around unemployment and the economy falls off a cliff, believe me, they won't give a crap about inflation. That's what they proved. You gotta look at the actions of folks, right? And pay attention to the commentary. Jay Powell always puts unemployment as the number 1, thing they're looking at as far as the Fed. It's more important than inflation and everything else for them. And so it's not really an opinion. That's just the facts, and that's just the data, and that's just looking at what they actually do, right? Now, the good news is, and this is Trueflation, I've been using this a lot lately, the numbers as far as inflation have been coming down, right? Now, every once in a while, you get these kind of like tick ups for a week or maybe even a month or something like that. But at the end of the day, what is the trend? The trend is inflation's falling massively and the comps are getting tougher and tougher year over year, which think about 2023. We're going to be comping against some months when CPI came in at 7-8%. Insane numbers. Absolutely insane numbers. So as inflation continues to hopefully come down, right? We're gonna essentially see the Fed, stop raising rates and maybe even consider cutting rates, but that will just start to be a consideration. They're not going to consider cutting until we have the economy fall off a cliff or until we really start to get inflation numbers to here, which is certainly a possibility in 2023. It's certainly a possibility we could get into those ranges, especially when you think about the comps year over year and you talk about the weakness commodities you're starting to see. And we got to talk about housing and all that in just a moment, which is a huge component of inflation. Okay. Now, before I talk about this, just look at this. Just look at this in front of your face right now and tell me what you see. What I see is a colossal problem, an absolutely epic, colossal problem. Okay. So this is a multi-year problem we're going to have to work through essentially, right? This is basically new homes under construction. And in the United States of America, right? We're at all-time records. We've way eclipsed prior to the great financial crisis. The housing bubble. Think about that. The housing bubble. We've blown the numbers out of the water. It's not even close. We're going way above the housing bubble at this point in time, right? And it's not like we weren't building any homes. We were already starting to build a lot of homes. I mean, if you look back at these time periods of 2015, 2016, 2017, 18, 19, 20, I mean, we were building still basically at higher rates than we were in the housing bubble. And then we just went through the roof. Well, why did this happen? Well, a ton of people were moving around, right? While a ton of, like moving to new states and whatnot. So it gave this false illusion of like demand, right? Because all these people move in states. Then you had a lot of people with a lot of extra money. You had people not being able to be kicked out of certain places and whatnot. So it created this like false illusion that no one really sees right now. But looking back in like 24 months from now, maybe even in 12 months from now, everybody will see, oh, that was a little bit of a false demand we had there. And rates were at incredibly low rates. Like if you were somebody that has access to capital, why would you not have bought some homes in 2020? You're watching a video right now from a guy that bought multiple homes and millions of dollars of real estate in 2020. Why wouldn't I have? It was like stealing money. At the end of the day, I mean, rates were so insanely low and there were so many people scared of the real estate market that you get tons of great deals out there at these interest rates that, if we do see them, it might be years ahead in the future, right? In terms of those mortgage rates in the twos, that's just like something you've never really seen out there, right? And so obviously a lot of folks bought a lot of extra homes, rental properties. You had corporations enter the market, which corporations have never really been a big component of the real estate market. But I mean, you look at some of these neighborhoods, you had corporations buying up to 40%, if not higher than 40% of the homes in some neighborhoods around the United States of America. So you had the corporations enter because they're like, oh my gosh, we can borrow money at 2-something%. Why not buy a bunch of homes? And look at rents are starting to skyrocket. This might be something good. So we get that appreciation plus we get rent, right? So nonetheless, the problem with this is what we're going to end up having is a multi-year holdback now on new homes being built. Because when you go through one of these, it's honestly like a bubble cycle. When you go through one of those bubble cycles, which is going to end up popping likely toward the end of 2023 and into 2024, what has to happen is multi-years where basically the amount of homes under construction starts to fall. It's something we saw in the last housing bubble, right? And it wasn't like it just fell for a few months or it fell for a year. No, it fell for several years. And it's exactly what we're going to see play out. We're going to see homes under construction start to fall massively in the back half of 2023. You'll see it play out in 2024 and probably even into 2025. And we'll be somewhere in here, right? And then eventually we'll start climbing back up again. So, it's like, oh, it's so beautiful, all these homes under construction. And I see it everywhere, man. Like, in Vegas, there's homes under construction everywhere. Phoenix is out of control. I drive around Phoenix, guys, when I'm at my Arizona house. It's ridiculous. Everywhere I look, homes being built. Everywhere. It's out of control. Completely out of control. And it wasn't like homes just started being built in Phoenix. Like we already had massive amount of homes being built in Phoenix prior to that, right? And it's a scary situation. It's going to be a multi-year holdback for the economy, and we have to understand that. But it's not just that. We'll have a multi-year holdback in apartment construction and multifamily construction as well. New apartment construction is pretty much the highest we've ever seen in the United States of America. It's gone to ridiculous levels, okay? And so this is going to create a multi-year holdback for apartment construction, multifamily in general. And it's just unfortunately the construction industry 2024 and probably 2025 is going to be in a bad place, man. A very, very bad place. You're going to see the amount of homes and apartments just absolutely tank in terms of what's being built. And believe me, that affects jobs in a major, major way, okay? Now, the good news, and this obviously matters for inflation, is what we will see is we're going to see one of two scenarios happen with rents, starting in kind of the back half of 2023 and especially moving into 2024. We might even see it in like second quarter of 2023 starting to play out. And there's two scenarios and really only two scenarios. When you got a record amount of homes being built, a record apartments coming online over the next 12 months, essentially, you're going to have one of two scenarios. The best case scenario is the economy doesn't fall off a cliff and it actually stays relatively strong and employment stays low. And therefore rents will basically flatline because you're going to have so much competition coming online. It's ridiculous. And so, you're just not going to be able to command those, let's raise rent again. You're not going to be able to, you're not going to be able to do it, or you're going to essentially have your home sit vacant. I'll show you some markets here in just a moment. Okay. The other scenario is obviously the economy starts to tank. And at the same time, all this massive amount of homes and apartments are coming online, which is identical to the housing bubble. Then you'll actually see rents decline. Yes, you heard me right. Decline in a pretty significant way, a pretty darn significant way. So one of those two scenarios playing out, and it's like, which one do you believe? And by the way, that's not just a 1 year thing. That's going to be for the next like 3 years. We're either going to have flatlining rents or we're going to have a massive downdraft, essentially in rents, right? And, I was looking at my city, Las Vegas, and I mean, dude, you can get a home or apartment for rent anywhere in the city right now. And mind you, keep this in mind, an insane amount of homes and apartments are coming online over the next 12 months in Vegas, right? So there's homes everywhere for rent. It's not like it was a year ago, 18 months ago, where it's like, dang, man, I'm trying to find a place to rent, but it's so hard. It's so competitive. These places now, holy smokes. And what do you think all these homeowners are going to do? And all these landlords and all these apartment complexes? Well, shoot, if you can't get somebody in, you need to get somebody in. So what do you start to do? Incentives. Oh, you get a free first month, or you get half off your first month, or half off your last month, or something like that, right? Which were incentives that when I first entered the rental market in 2011, when I moved out of my parents' house, I got a 1-bedroom apartment, right, in Glendale, Arizona. And I got one of those deals that it was like, I can't remember if it was like half off the first month, but that was like customary around Phoenix. Almost all the apartment communities were having to do that because they're all having to compete with each other, right? And so that was one of those situations that had to play out there, and that you'll see the same as that situation. If you having trouble, if there's a limited amount of buyers out there for a product or service, right? And there's like, a lot of competition for you. At the end of the day, what you have to do is you have to cut price. It's bottom line. That's the only option you really have, right? Is cut price and make better incentives to get people in there. And so what happens when you start cutting price or making all these incentives? Well, the amount of, obviously it costs the consumer starts to go down and down and down, right? Look at the amount of homes for sale in Phoenix now at this point in time. I think this number is going to go higher probably over the next 6 to 12 months. And, once again, a year ago, 18 months ago, it was a very different scenario. It was like, man, it's so hard to find a place to buy in Vegas. Not like that anymore. I mean, look at all those dots. An incredible amount of inventory has now hit the market over the past 12 months, right? You look at Arizona in the Phoenix metropolitan area. I mean, look at the amount of homes for sale now in Phoenix metropolitan. It's out of control. I mean, just simply out of control. And once again, we have a record amount of homes and apartments coming online in Phoenix over the next 12 months. So it's not like it's going to get better. It's going to get worse in terms of the amount of homes hitting the market for sale. Maybe even potentially foreclosures. We'll see about that, right? That really depends on the economy. And in terms of homes to rent or apartments to rent, oh my gosh, that's a record amount that's going to be hitting over the next 12 months. So now at this point in time, the only place really for rents to start going as 2023 will roll on is down, which is obviously going to help inflation out immensely. It will help out the overall economy as well, because at the end of the day, folks always have a finite amount of money to spend, right? It doesn't matter how rich you are or how poor you are or how middle class you are. Everybody's got a finite amount of money to spend. And at the end of the day, if you have an extra, let's say you're saving $200 a month on your rent versus, a few years ago, let's say in 2023, 2024, then that's extra money you have to obviously spend other places, which is a good thing, right? Because rents and obviously mortgages, because people have had to buy homes at very high prices, it steals money from being spent in other places of the economy. And that's something we do all know, right? So that's something to keep in mind, right? Now, in terms of how I think some stocks are going to fare, okay? I think the Dow stocks are going to have trouble in 2023 regardless. Keyword is regardless of what happens in the economy. And the reason being is a lot of money rotated here in 2022 to these stocks, right? Because you got to understand, the market is of the belief that the general belief from Wall Street is 2022, not a recessionary year. It's a year you got to prep for the recession for 2023. So if you're doing that, the Wall Street playbook, what does it say? It says you rotate your money over to the safe stocks. And the safe stocks are considered the Dow stocks, the Dow 30. They're considered the Coca-Colas, the Pepsis, the Johnson & Johnsons, the Procter & Gamble's, all those sorts of stocks, okay? That's what they say to rotate your money to. That is Wall Street's Playbook 101. So going into a recession, which is what they believe is going to happen here, right? They're going to rotate their money that way. And that's the way it plays out, right? But keep in mind, what ends up happening once you enter the recession and things start to get worse and worse, that's no longer the playbook. Then the Wall Street playbook says something else, and we'll go over that in just a moment. So these Dow 30 stocks, I think, are going down in 2023 regardless of what happens in the economy. And it's just a question of what quarter does it start in? That's a big question. Is it the first quarter, is it the second quarter, is it the third quarter in terms of these stocks start tanking? That's a big question for me, okay? Now, In terms of these stocks, right? The stocks that, let's be honest, everybody wants to be in these on Wall Street. Intuit, Adobe, Salesforce, Nvidia, Amazon, AMD, Tesla, PayPal, Meta, Shopify. Dude, Wall Street wants to be in all these stocks. They really do. This is where they like to be. This is where they like to invest in. This is where they see opportunities, right? These stocks have obviously not been the play in 2022 until recently. A lot of these stocks have started to come back very recently over the past, I would say, month and a half. It's very clear if you look at their stock prices, they have started to come back. But let's be honest, these stocks at the lows, for many of these stocks, it was 50, 60, 70, 80% declines. For all the stocks that Wall Street loves more than any, right? Now, what you're going to see for these stocks in 2023, in my opinion, is you'll see them rally, then you'll see them sell off big time, and like, oh, it's still not the time to get in these stocks, right? And then you'll see them rally, and it's like, oh, it is the time to get in these stocks, and you'll see them sell off. But overall, what I expect is a trend to be up throughout the year for these stocks overall. It will be an uptrend. You'll just get these like big rallies and everybody's going to be like, oh, it's time to pile back in these. And then you'll get these big sell-offs of everybody saying, no, not yet. Not yet. It's too early. It's too early. Wait till a few months from now, essentially. Okay. That's what you'll start seeing in all these stocks. But like I said, at the end of the day, Wall Street wants to be in all these stocks here. Okay. Now, look at this here and tell me what you see. Okay. There should be something very interesting here. Remember what I just talked about, right? Which is the Wall Street Playbook. The Wall Street Playbook says if you're getting ready to go into a recession, you need to either put money on the sidelines or you need to rotate your money into the Dow stocks, right? So look at stocks like McDonald's, Johnson & Johnson, Pepsi, Coca-Cola, Caterpillar. Well, countless other stocks have been wrecked this year. Like I said, most of these stocks fell 40, 50, 60, 70, 80% at their lows, right? These stocks have held up tremendously well. And you look at it, it's like, wow, you wouldn't even have known this was a bad year for countless other stocks if you just look at Caterpillar and you look at Coca-Cola and you look at Pepsi and you look at a lot of these Dow stocks, right? But what happens is as you start to enter the recession, what happens is these start to sell off big time. So what you'll start seeing is you'll see a rotation of money from here to over into these in terms of positioning for the next bull cycle. This is the way they do it, okay? So as 2022 was a complete sellout of these stocks, you start to see a rotation of money into these, right? Because once the recession starts to hit, and this is Wall Street's opinion, once again, this is Wall Street's blueprint. Once the recession starts to hit, right, the Fed starts to cut rates, and next thing you know, the Fed starts quantitative easing, which starts to help out, obviously, the financial markets, the tech stocks, and all those sorts of companies start to do very, very well, right? And so the Wall Street Playbook says, going into recession, rotate your money to either cash or rotate your money to maybe even treasuries. We'll talk about that in just a moment. Or rotate your money into, the stocks that are the safeties. And then as you're in that recession, as it gets confirmed, you start to rotate that money out into the more speculative plays because you know the Fed's about to come with a massive money printer behind it to help out the economy, to help out the markets in general because it's in a very, very bad place. And so that's Wall Street's playbook to a T. And you can see it in the price action. It's not like it's just an opinion. You see it clear as day in the price action. Like I said, opinions can be opinions, but at the end of the day, look at the actions. And you look at the actions and it all lines up perfectly for exactly what essentially Wall Street's want to do in this situation, right? Now, what you can also see in 2023 as the year plays out is in terms of the money that's been flooded to treasuries, you'll start to see that get rotated also into a lot of those other stocks, right? Because there's been a big rotation of money into treasuries. They're huge. And at the end of the day, a lot of these folks, high net worth individuals, Wall Streeters, they don't want to hide out in treasuries forever, man. They want to get back in Amazon stock, Shopify stock, PayPal, Tesla. They don't want to hold out in treasuries forever, man. Give me a break, okay? Now, here's the deal. If there's a major recession, we're going to likely see a 20% decline for all indexes from here, okay? That's from here. If we get that major recession where the economy just falls off a cliff, unemployment skyrockets, you'll see a massive sell-off in the indexes, even though everybody will look at it and be like, oh, Jay Powell's about to come with the money printer. Still, there will be an epic sell-off because all of a sudden everybody's earnings are going to tank, and then people are going to have to revalue all their companies they own because obviously they're not going to expect their companies to do as well in a major recessionary environment. Okay, so you would see literally all the indexes fall a minimum of 20% if we get a major recession in 2023 and it gets bad fast, which is a possibility. I'd call it a 40% possibility, honestly. Okay, now if we don't get a major recession, let's say we get a minor recession, or let's say we don't even get a recession, which would be, that would be nice, but it'd be a miracle, right? I think the Dow's going down no matter what in 2023, and the Nasdaq's going up in that sort of scenario. Because at the end of the day, people are looking to be like, okay, maybe this recession is not coming. We need to start rotating our money and get back into place that are obviously the ones that are going to climb and do well over future years. Okay. So, nonetheless, guys, busy video there. I hope you enjoyed it. Thanks everybody for joining me. That was a kind of a beast of a video there. I would love to hear your opinion on what you think is going to happen in the markets in 2023 and kind of how you're positioning for 2023. For me, it's back to blueprint, profitable companies, great balance sheets, great business models, and those sorts of stocks, obviously, that have made me successful over the years. And as far as the speculative ones, I'll hold those ones, but not looking to add those ones in 2023. Much love as always. Appreciate y'all. Check out the pinned comment down there if you're trying to get in my private Discord chat, the private stock group, anything like that. There will be pinned comment down there. And have a great day.